What's up guys, Alvaro here. Welcome to the Bilingual Stock Market channel again. In this channel we talk about the stock market and we do it in two different languages, English and Spanish. So if English is not your cup of tea, you can also watch this very same video narrated by me in Spanish. In this video we are going to be talking about trading. In this video I want to share with you guys the method that I use before taking any short-term trade in order to determine or to predict the direction of the market as a whole, which is essential it is essential to complement your technical analysis. So let's get into this. First and foremost, the most important index that you need to track before taking any short-term trade is the S&P 500 or the Standard & Poor's 500 index. The Standard & Poor's 500 is the most important index of the United States stock market with a market capitalization of $30 trillion. Then we have the Nasdaq with a market cap of $17 trillion, and then we have the Dow Jones Industrial Average with a market cap of $8.33 trillion, okay? So for the most part, most of the stocks that trade in the United States stock market mirror or follow the trend of the S&P 500 for the most part. And inside the S&P 500, we have two very important sectors that usually define from an intraday perspective what direction the S&P 500 is speaking. Those sectors are financials and the tech sector, all right? The tech sector represents a 25.70% of the total market capitalization of the S&P 500, and financials represent a 10.60% of the total market cap of the S&P 500. So what happens here? Between these two sectors, we have 35.70% of the total market capitalization of the S&P 500. So if you guys keep a close watch on these two sectors during any trading session, you will be able to take your short-term trades without having the disadvantage of fighting the trend of the overall market. And as I said before, most stocks out there will simply mirror whatever the S&P 500 does. Unless, of course, there is a very specific catalyst in regards to a stock. So if we have good news in regards to a specific stock, that stock will probably pull up regardless of what the market does as a whole. Or on the flip side, if we have bad news, the opposite would happen. A stock will drop despite the market pulls up. So in order to follow up on the tech sector, I use the ETF inside the S&P 500 that comprises the most important 74 tech companies that trade, as I said before, in the S&P 500. Sorry guys, that ETF is XLK, okay? And in the case of the financial sector, I use XLF, which is an ETF that comprises the 66 most important banks and financial institutions that trade inside the S&P 500. So inside XLF, we find companies and banks such as Bank of America, JP Morgan, Goldman Sachs, and American Express. And inside XLK, we find companies such as Apple, Microsoft, Nvidia, MasterCard, PayPal, and many more. So, guys, the market, please keep this in mind, the market is going nowhere without the participation of these two sectors, financials and tech. So if you guys can master how to read the performance of these two sectors, you will be, of these two sectors that trade inside the S&P 500, you will be way more accurate when it comes to enter or exit a short-term trade. So let me show you how my method works. Okay guys, so first of all, before taking any trade, I obviously do my technical analysis, all right? I determine levels of support and resistance using the 4-hour chart. That's my favorite chart when it comes to doing my technical analysis. I also check on the RSI, the Relative Strength Index, to make sure that I am not buying any overbought stock. But despite having my technical analysis, I do not take any short-term trade before making sure that I am not fighting the trend of the S&P 500 during the trading session. So here you guys can see on the top of your screen okay, now I have the SPX there. Hold on. On the top of your screen, you guys can see the SPY, which is an ETF that tracks the S&P 500, that tracks the performance of the S&P 500 as an index. So if the S&P 500 pulls up, SPY is going to pull up as well, and if the S&P 500 pulls back, SPY is also going to pull back. And on the left side of your screen, you guys can see XLK, which is the ETF that tracks the performance of the tech sector in the that trades inside the S&P 500. And on the right side of your screen, you can see XLF, which I already told you guys is the financial sector. Okay, that trades inside the S&P 500. So check this out, guys. All right, take a look at the correlation between the tech sector, the financial sector, relative to the S&P 500. So let's go ahead and take a look. By the way, guys, this is a 1 minute chart. When it comes to taking short-term trades, I use the 1 minute chart. And for those who don't know what the 1 minute chart is, a 1 minute chart is a chart that shows candlesticks that are formed every minute. Okay, so in my opinion, the 1 minute chart shows the best candlesticks to decide upon a short-term trade. Okay, such as a day trade or a short-term a swing trade. Okay, so take a look at this, guys. We have a green candle that is being formed on SPY, and we have a green candle that is being formed on tech, on XLK. Okay, now we can see that the tech sector is pulling up, and take a look how the SPY or the S&P 500 is also pulling up. Okay, now we have a red candle on financials, all right, but we have a very big green candle on tech. So we are very likely to, the S&P 500 or the SPY is very likely to close a green candle here, just because the tech sector pulled up consistently through this candle. Now we have the financial sector showing a red candle that is turning now into a green candle, now red. Okay, so we have some sort of indecision here. We have another big green candle on the tech sector. So yeah, the SPY is very likely to also close this next candlestick in the green. Let's see what happens now. Okay, a red candle on financials, but we have a very strong green candle on tech. Okay, remember that the technological sector is the largest sector by far that trades into the S&P 500. So despite we're having a red candle on financials, we're having two very nice and strong green candles on tech. Okay, it's pulling up. So we should have another green candle on SPY. Let's see what happens, guys. Okay, remember that this is a 1 minute chart. Okay, so take a look, guys. We had a red candle on the SPY despite the tech sector was pulling up. Why? Because we had a red candle on the financial sector. Okay, so let's see what happens next. We are having a green candle being formed on the SPY. We have another green candle on the financial sector, and we have some sort of indecision on the tech sector. Let's see what happens. Okay, I'm gonna zoom in a bit here. Sorry, I zoomed out there. Okay, we have another green candle on tech. We have a green candle being formed on SPY, and we have another green candle that is being formed on financials. Okay, now the green candle on financial is trying to point. Now it's pulling up. Okay, now we have indecision on tech, but we are very likely to have another green candle on the SPY because we have two green candles now. As you guys can see over here, there you go. It closed, and we closed another green candle on SPY. So the correlation is clear, guys. If you see green candles on both sectors, financials and tech, the most likely outcome on the S&P 500 is pulling up. Okay, that's the way it works. So before taking any short-term trade, you need to check on these two sectors, tech and financials. And if you see, before taking any short-term trade, and even if a stock gets to the price action that you're looking for to take the trade, but if you notice that these two sectors are showing red candles, that implies that the S&P 500 is very likely to pull back, and that implies that if you take that trade in that specific moment, your entry price is going to be wrong and the stock that you are buying is very likely to pull back. Okay, that's the way this system works, and believe me, this system works, guys. I am a very successful trader, all right? Most of the stocks that I purchase, all right, following this system are stocks that I purchased, and immediately after having purchased them, they pull up. You know, in the 80% of the cases, all right? And by the way, guys, if you want to track the S&P 500 itself using Thinkorswim, which is the platform that I use to trade, you can check on SPX, all right, which is the S&P 500 itself, all right. If you prefer to take a look or follow up on the S&P 500 itself instead of tracking or following up on SPY, which is the ETF that tracks the S&P 500, all right? Or if you have more than one screen available, sorry guys, if you have another computer or something like that, you can pull up the S&P 500 on Google or Yahoo Finance or any other trading platform like that, okay? So guys, this system works, as you just saw. So if you start applying this system, you are going to be way more accurate when it comes to take a short-term trade. I guarantee you that. And mind you, I am not a financial advisor, all right? Remember, if any of you guys wants to trade the way that I do it, you guys have to do your own research work and get your own conclusions, obviously. So guys, in conclusion, it is critical, all right? I really need to emphasize this. It is critical that before taking any short-term trades, you get familiar with the levels of support and resistance of the S&P 500 or the SPY. And after having a good idea about where the S&P 500 could potentially go during the trading day, you go ahead and do your technical analysis about the stocks that you want to trade. And listen to this, guys, and I'm gonna tell you this because of my own experience. If you take trades without being aware or having an idea of where the market could potentially go, of where the trend of the day is pointing at, you will end up losing money. I guarantee you guys that, okay? And by the way, guys, there is a website that I want to show you that you can use if you're interested in tracking the 11 sectors that trade inside the S&P 500. The name of the website is coifin.com, as you guys can see over here. Okay, so let me show you. You need to obviously look it up, and you have to sign up. All right, I already did it. I already signed up, but you don't need to pay anything. All right, and once you signed up, okay, let me show you, let me log in. Okay, so once you sign up, you're going to hit market dashboards, and then you're going to hit US sectors, all right? And there you go. So now here we have the 11 sectors that trade inside the S&P 500, all right? I have the one-day chart, so this is the way that these sectors are trading as of now. Okay, but you can also pull up the performance of every single sector in the last 5 days, the last 3 months, the last year, and so on. And I ask you guys, what method do you use before taking any trade? Do you guys track the S&P 500, or do you guys simply take a trade regardless of whatever the market is doing as a whole? Please drop a comment down below and let me know your thoughts. Okay guys, I am going to wrap it up here. Thank you very much for your attention. Please hit that like button for me. Subscribe to the channel if you haven't done it yet. Remember, this is the Bilingual Stock Market channel, the channel of YouTube in which we talk about the stock market, but we do it in 2 different languages, and most importantly, the YouTube channel in which we know that the stock market is not for geniuses. It is for entrepreneurs just like you guys and myself. I will see you in my next video. Peace out.